Okay, what I want to do is give us a big picture about small firms in the economy. It's rather a tall order I've asked myself, and I start off the presentation with quite a general picture, and then I will drill down into some case examples to illustrate some of the major points I want to get over. So the type of the presentation is Government, SMEs and Entrepreneurship Development, the challenges of intervention. Four main objectives of the presentation. First of all, I want to discuss the effectiveness of support for SMEs. If small and medium enterprises are going to be sustained and be sustainable, then my principal argument is they've got to actually engage with organisations and support networks outside the conventional barriers of the firm, outside the conventional barriers of the enterprise. I want to explain the reasons for the mixed success of policy interventions. If you look across the world, policy interventions have been occurring for SMEs for over 50 years. And actually, if you look at the evidence, to be honest, to be frank, we're not very good at it from a policy perspective point of view. And I think there's a critical role here, which will come out of the presentation, a critical role for accountants in this, let's call it this new framework I'm proposing. I want to actually get over the importance of SMEs. Barry mentioned earlier on how important SMEs are in the economy, and I've got some numbers to throw at you. I don't have many statistics in the presentation, but I've got one or two just to illustrate the fundamental points I want to get over. Finally, I want to suggest possibilities for improvements. It's quite easy being critical as an academic, but I've been in the field for over 30 years, and I do understand that if you're criticising something, it's a good idea to actually suggest and replace it with something else. So it's not rocket science, but I think that there are some basic things that could occur to help SMEs sustain themselves and also provide better routes for engagement with the support infrastructure. I'm going to draw upon a wide evidence base, and I'm going to illustrate the points that I make with, let's call it evidence that I know of. Historically, and I would say conventionally, academics normally do a piece of research and then present the results. This is not that type of presentation. This is more a thought piece to help our thinking and help the conference theme in terms of saying how on earth can the accounting profession, the support networks help SMEs sustain themselves. From a public policy point of view, given that often entrepreneurship and small firms are regarded as, let's call it, the bastions of free enterprise, why on earth should we have a support infrastructure for SMEs? After all, these organisations, these independent shops, these independent manufacturers and so on, service professionals, they represent the spirit of the free market. But actually, there is massive public policy interventions that take place to encourage and support that form of enterprise. The biggest conventional reason is gaps in the market, and the gaps in the, let's call it, a lack of provision from private organisations to support SMEs. So really public policy is developed over time because of the gap in the market. So conventionally economists would call this market failure. So, and this is a traditional reason for public policy intervention more broadly in the economy, but certainly for SMEs and support for SMEs, the infrastructure around has been a little bit shaky. And there have been early investigations. The first report that I come across, which has talked about small firms intervening, is the Macmillan report in the UK. It's a coincidence I'm from the UK, but I would say in terms of public policy for SMEs, the UK has got probably one of the longest standing and complicated, if you want to be polite, sophisticated means of supporting SMEs. So I'll draw upon a lot of the UK evidence, because often what goes on in the UK is then sometimes replicated elsewhere. And I know here in Australia and also in New Zealand, ideas are shared between the UK and the federal and local governments elsewhere. But the first point of call was the Macmillan report in 1931, And a recurring theme throughout the history of interventions for SMEs has been on finance. And the Macmillan report found that there were gaps in the support of, financial gaps for SMEs in the UK as far back as 1931. And a number of instruments were introduced by the government as a result of that report. But since then, I would say support for SMEs fell into abeyance, and even in the 1950s and 60s, small firms were regarded as an anachronism, something that we should ignore, and they should go away, because really to get big and become international, you had to encourage the corporate sector. And it wasn't until the 1970s that there was a realisation that small and medium enterprises, or small firms as they were called then, were actually really still the backbone of the economies. And this was demonstrated in a number of coincidental reports. The Bolton report in the UK in 1971, the Wiltshire report here in 1971, and I've got loads of examples actually that I can throw at you, and the Malloret report in 1973 in France. Bear in mind as well, on top of that, we had the Small Business Administration that had been founded in the USA in 1953 to support small firms. So there was, let's call it, a steady awakening of the importance of SMEs in the economy. Following that, the big fillip for support for SMEs came in 1979, and it was a report by Birch in the USA, which found that 66% of net new jobs were created by small firms in the USA. And this was a fundamental, I would say, foundation stone for the rise in the interest of small firms by governments, certainly in the Western economies and developed economies. That created a linchpin. If you bear in mind, the 1970s, the economies were just coming through a period of stagflation, unemployment was rising, inflation was relatively high, and economists and governments were actually looking desperately for solutions. When the Birch report came out, and they realised that actually large firms were shedding jobs and small firms were increasing their share of jobs, there was a realisation that, hang on, we actually want to build upon that base, and we want to help SMEs become more sustainable. And I would argue that as a result, a number of themes came out of this renewed interest: growth, innovation, job creation, and small firms were certainly politically attractive. From a hard-nosed, you could say, cynical point of view, there's a lot of votes among small firms. Small business owners are also voters. And so all of a sudden, for example in the UK, the Labour Party, the Labour governments, which were traditionally supporters of the conventional tripartite system of government, employers and trade unions coming together to influence policy, all of a sudden you had owner managers, SMEs that were important. And since that date, even left-wing or political organisations in the UK, and I would say elsewhere, have an SME strategy, an SME policy. And indeed, I've just been feeding into quite a number of political parties, because we try to be neutral, but I know the Labour Party in the UK, for example, now the Small Business Task Force. So in a sense, all of a sudden, small firms are attracted to everybody. So from a policy point of view, this will not go away. And so not only do we have policies, there are certain institutional frameworks that have also been developed over the years. I mentioned the SBA in the USA. There's the National Development Reform Council in China. Again, I've done work with those, with the NDRC, in terms of developing a framework to support SMEs in China. And indeed, that project, for example, I kept thinking to myself when I was going to China, why do the Chinese need help from Britain? But in fact, what's happened there is, yes, there's a burgeoning of SMEs in China, but there isn't so much of a support infrastructure for SMEs in China. And similarly in New Zealand, which is, okay, you could say a more developed economy or an older economy, there's a Ministry for Economic Development which is focused on SMEs. And here in Australia as well, clearly, I mean, an example here is today's conference, that there's a renewed interest in small and medium enterprises. So really broadly, from a public policy perspective, we did see a drop in interest in small firms, and a view that they were old-fashioned and something that we should ignore, but actually they will not go away. There's a growth in the institutional support frameworks, and also let's call it a plethora of policies to try and encourage small and medium enterprises. So last year I finished a piece of work with Michael Schaefer, and we actually did this piece of work was looking at public policy interventions across the world. It sounds rather a grand project, but it was limited in what we could do. But it's fair to say that most countries have an SME or entrepreneurship policy, irrespective of their state of development. You go along to any country now, be it in Africa, South America, Northern Europe, they all have an entrepreneurship or small business policy. Some of these organisations are supranational. So, for example, the European Commission has a small business strategy, which all European state members actually have to broadly follow. And every member of the European community has an enterprise entrepreneurship envoy. So basically, this is a link between the Commission and nation states. So broadly, I'm painting a picture and saying that actually there is an interest in small firms as policies and institutions. We shouldn't forget the local flavours, and this came out in the piece of work we came across. So whilst we have a general movement, the local economic, social and political context is crucial here. So for example, in China, in Vietnam, the big push has been to encouraging an enterprise culture and also deregulating quite a lot of what was done through, let's call it a command economy or a planned economy. In the USA, they've gone, which is often held as one of the fantastic examples of public policy intervention. They originally started with a conventional view of developing financial packages. Now they've moved towards encouraging an enterprise culture. So basically, you're embedding entrepreneurship in schools, in a way of living, rather than just purely financial incentives. There are similar themes, that the growth of institutional organisations. I've mentioned that often small business policy starts with a financial intervention, and then there are other initiatives. When we looked at the big picture, and again I'm just talking generally here, we are actually awash with interventions for SMEs. I would say there are too many. And my big mission in this field is to say we want less interventions, but we want the more appropriate interventions. So I've talked from a public policy perspective quite generally, but let's think about from the SME's point of view. We're saying, well, these small firms need intervening. Well, what about their point of view? Well, there is an a priori argument as to say, well, actually, we do need an infrastructure to support SMEs. They have a limited internal resource base, and this argument is often called the resource-based view of the firm. The sheer scale is small. The level of expertise will be limited within a small firm in terms of financial, human, and technological capital, because there's only the smaller the enterprise, of course, naturally, there are fewer resources that you can have. So really, the SME should be regarded as an open system, and successful small firms need to go outside their enterprise to draw upon an external resource base. That means that we have to rethink the concept of the SME in many ways. Don't regard small firms as closed organisations. We should regard them as open organisations, and we should try and penetrate them with various support infrastructures and so on. So there's a strong a priori position that SMEs, in order to be sustainable, need to draw upon external resources in order to survive, develop and grow. So that's the position, if let's say, in theory. But actually, all the evidence we have, and I've undertaken a number of surveys, and I'm drawing upon other people's work as well, is this is quite curious. We've got, let's say, small firms that have limited resources, and they struggle, often going from day to day in terms of struggling, but they have this inbuilt ambivalence to actually taking on external advice and support. And if you try to explain this, because from an outsider's point of view, you would say this is quite irrational. Actually, it does add up. It does make sense, because often people who start their own business do so because they really like a sense of independence. From a psychologist's point of view, research has shown that successful entrepreneurs have a strong need for achievement, and they have a strong internal locus of control. And they're contrary characteristics to actually going outside and seeking advice and support. So objectively you could say these organisations need support, but actually the very people who are driving them don't want to go out and get support. This is really, I'll come around to you will see where I'm coming from, because I think there are important implications here for accountancy organisations and other intermediaries to bridge this gap. Business owners, therefore, are very antithetical to intervention. And when you talk about public policy intervention, they're even more antithetical, because they often regard the state as the regulator, the people who are stopping them doing things. So from an owner-manager's point of view, why on earth should they walk into the lion's den and try and get advice and support? It's contrary not only to their psychological makeup, but it's also contrary sometimes to their beliefs about the way in which society should operate. So going outside for advice and support is often seen as a sign of weakness. Linked to this is the actual rationale for why they're running the business. The bulk of research suggests that people who are running their business, they're intrinsically interested in the product or service that they're doing. They've often worked for a large organisation and thought they could do it better themselves, or they've developed a career path which leads them to actually being an expert in a specific niche. And therefore, they're less interested in, let's call it, the broader strategic direction of the organisation. So quite a lot of SME owner managers are unable to step back from their business because they're quite busy doing the business rather than thinking about the broader direction of the business. They're interested in stability and security of income rather than being a massive growth enterprise. I'll come on to that in a moment as well, about this let's call it the lure of focusing on growth businesses. A couple of other things as well. Often we're led to believe that entrepreneurs, business owners are driven by profit. Actually, when you speak to them and when you study them, the bulk of business owners are doing it because of other motivations, non-financial motivations. Of course, they want to earn an income, but I would say it's only a minority of owner managers who start a business purely to become a millionaire. Not denying those people don't exist, but we're talking about the mass of businesses, the mass of small firms. It's about the interest in the product or service, the intrinsic interest. They're not really interested in employing people. I mean, I've interviewed business owners and I've said, what about employing people? They said, Robert, this is the last thing I want to do. The minute you take on your first employee, that's when your problems start. It's a sad thing to say, but actually employers really, I mean, they're employing people as a means to an end. But certainly from a civil servant or a political or government point of view, they're expecting small firm owner managers to take on lots of people. So there's a contradiction there between often what's being provided and what small business owners want. So in the big picture, I would say from a small business owner's point of view, at best, owner managers are ambivalent about policy interventions and engaging with them. So you can have the world's most sophisticated public policy infrastructure and initiatives, but actually there'll be silence when you open the door. There won't be a big queue of people taking up what's available from the government. At worst, I would describe this as a fortress enterprise mentality, and I would say that at worst, actually it's detrimental to the SMEs themselves. because actually they do need help, they do need support, they do need advice, because they cannot have it all in-house. So we've got a fundamental problem here. So, big argument against public policy. We often see a reinventing of the wheel, often old policies that are around and initiatives, sometimes relabelled, rebadged. And small and medium enterprise owner managers, when you speak with them, they say, oh, well, this is just another political intervention, it's for their interests, it's not really for us, we're being used. So there's a certain element of cynicism. Bear in mind, small business policy, I would say, is relatively new compared with macro and microeconomic policy more broadly, but it's been happening for 40 years or more in a serious fashion, and billions of dollars have been spent on this. But actually, quite a lot of business owners are quite cynical, or it really doesn't enter their world. That's government, that's out there, that's for somebody else, not for me. There are a few other things that, from a public policy point of view, where we have problems. Evaluation techniques are really, let's say, underdeveloped. We do not have sufficient techniques to measure the impact of public policy interventions. So the critical, from a UK Treasury point of view, which is an evaluation book, is about additionality. For every pound we spend, for every dollar you spend, what is the additional level of economic activity out there? To get to that magic number is incredibly difficult. Bear in mind, if we, I'm making an argument to say more policy can be worse. If we start to introduce a lot of initiatives to encourage SMEs, there are displacement effects. There are already existing small firms out there. So if we're subsidising and supporting, for example, new business startups, that may displace existing, genuine business owners who pulled themselves up by their own 2 feet and started a business. So we've got to be very careful that we don't displace existing activity. Then, of course, there are people who would have gone ahead and done it anyway, and we're giving them money as well, and that's deadweight money, because basically that would have happened anyway. So you have to take into account displacement and deadweight when you're encouraging SMEs and supporting them from a public policy point of view. Getting those actual numbers in a scientific manner is incredibly difficult. So there are challenges there about our evaluation techniques. On top of that, I would say, if you compare, let's say, breakthroughs in medical science, even over the past 40 years, there are things that we do now in the medical world which never occurred 40 years ago. Been fantastic breakthroughs because there's been a steady accumulation of evidence and learning from mistakes. I would say that doesn't happen with public policy. From a public policy, I would say we're still making gross mistakes. So there isn't, although the evidence base is shaky, we're still not using what we have to refine, to improve small business policies. I'm not being unrealistic. I do accept that public policy is also a political process, but certainly we need a much greater scientific input into the way in which small firm policies developed and rolled out. There's also a researcher policymaker divide. First of all, policymakers are often reluctant to take on what academics or researchers tell them, because they will say, look, Robert, that's fantastic, but listen, I'm in the real world. I actually have to report to a minister, and the minister said 3 weeks ago in a speech this, what you're telling me is contradictory, therefore, no, and something else will come out, not following the evidence. I think also from a researcher's point of view, and this is for other academics in the room, researchers often are unable to extend or think beyond their latest piece of academic work. We've got to try as academics to try and extend and engage with policymakers to influence and have impact in society and the economy and the environment. Quite a lot of academics aren't very good at this, but they're fantastic at creating papers that no one will read. So really, from a researcher's point of view, particularly an academic's point of view, we have to get up off our backsides and engage and talk with policymakers and influential intermediary organisations, like accountancy organisations. I accept I've talked very general so far. What I want to do is just take a micro level view. I'm going to draw on some evidence from the UK. Predominantly, I have to be honest, that's because what I know about. But also, as I've said earlier on, what goes on in the UK often is looked upon by other organisations and other governments for ideas. At the moment, the UK government has actually cut back on SME support, but there's still quite a few pillars of support that exist. Really what's gone on is we've seen a reduction in, let's call it, the face-to-face interaction with advisors and so on from a public policy point of view. There's much more internet-based support, virtual advice and support, less so the local enterprise agencies which existed 30 years ago, where someone was thinking of starting a business and could walk down the road and pop in. But it's all internet-based now. And these are the, let's call it the 7 pillars of support that exist at the moment. So if you look at the 12 o'clock there, big issue in any small business policy, a core issue is financial and taxation issues. If you go around the plot there, the more intensive one is the top left-hand side there, 11 o'clock, business coaching for growth and gazelles. So the UK government's emphasis on public policy now is on growth. So what they're saying is, look, in the UK, we've got 4.5 million businesses in the UK. We can't support them all. What we're really going to do is intensify our support on growth businesses. And I think that's been echoed actually throughout the rest of, certainly some of the developed economies. Personally, I think it's a mistake, but that's the way it's gone. Barry mentioned earlier on that the importance of SMEs, and I'm not going to dwell on this, you can find these statistics anywhere, and this is in 2011. 2010 data. And actually the interesting thing is the recession has not reduced the number of small firms. The number of small firms in the UK economy has gone up in the recession, it's not gone down. But this gives you a flavour about the size distribution of firms. So we have here 4.5 million private sector enterprises. This grew between 2010 and 2011 by 94,000 businesses. 2/3 are sole proprietorships. That doesn't mean to say they're one-person businesses. Obviously, they can employ other people. And only around a quarter of them are companies. These are private limited companies, registered companies now, which actually makes it fascinating from a researcher's point of view because the data is not there. You've actually got to go and collect it yourself. 3.2 million of them are zero employment, so these are one-person enterprises. I'm sure these slides will be available if anybody's interested. Actually, final point here, just to bring it home, we've got 4.5 million private sector enterprises. Only 7,000 employ more than 250 people. I understand, and I've looked at the statistics for Australia. If you compare Australia with the UK, Australia is even a more small firm dominated economy than the UK. We're a relatively large firm dominated in the UK. I've talked so far about SMEs, and I don't want us to miss the point that actually there's no such thing as the SME sector. The SMEs marketplace is incredibly heterogeneous. So again, in terms of a more refined system of intervention, we have to think about the different segments and how we can, let's call it, segment the SME marketplace there's no single answer. So we've got, for example, SMEs by region, personal characteristics of SMEs. I've said earlier on, the bulk of business owners are interested in survival rather than growth, but some of them are interested in growth. Some of them deliberately start a firm to say, Robert, what we will do, we want to grow this firm and sell it. And I've got an exit strategy, I want to be out of here in 3 years. That's not very typical, but those businesses do exist, and you've got to think about personal characteristics. Size is really important. A firm that employs just 5 people is very, very different from a firm that employs 75 people or 150 people. So you've got to be careful again. Different sector. I would say sector is one of the principal ways in which we can engage with small firms. You've got to demonstrate, if you're advising a business, that you know something about the business sector within which it operates. And indeed, quite a lot of the criticisms of public policy interventions is that business owners say, I'm in the electronics industry, I want to see a person from a government agency. They know nothing about the electronics industry. How can I trust them and believe them and take on their advice? So again, there are sector-based organisations that are important here. Growth trajectory, I've talked about this. Life cycle. In the UK, I said that there's 4.5 million businesses. Every year, and these figures do vary slightly from year to year, there are 400,000 stops, 400,000 startups, roughly. Maybe obviously the number of startups is higher than the number of stops, but you'd say it's about a 10% churn. Of course, a business that is a new firm has got totally different needs for advice and support from a firm that's exiting. And similarly, a firm that's maturing. Very, very different types of needs and requirements are required. And then finally, of course, region. There are different delivery methods. And I don't think there's a panacea, but I do understand that in Australia, for example, there are different, let's say, local organisations providing advice and support, and it would be wrong to actually impose, let's call it a normative system on the way in which different regions have different flavours of support. So it's quite a lumpy market. Indeed, sometimes in my worst moments, I wonder why on earth we use the term SME at all, because from a business owner's point of view, it's meaningless. It's a marketing term and often a political term, but it's something we have to go with. And then, of course, we've got the way, not only do we have, let's say, that static picture, we also have a dynamic. There's been a rise in micro-enterprises, and within that we have different organisational forms. So we have sole proprietors, we have companies, we have partnerships. In the UK we have something called limited partnerships. We have social enterprises, we have franchises, and again you've got to work out whether or not these are sufficiently independent or not. You know, in the franchise market there's what we call hard franchising, where you have to follow the rule book, right from the way in which you speak to customers to what you deliver. And then you have soft franchising, where actually you've got some flexibility, and what you really have to do is you've got you lock and you book it with a label on it, and you follow, let's say, broad guidelines. So again, you've got to think about the different organisational forms in the SME market. We've also seen an increase in what we call the churn of businesses. This is a rise in the number of starts and stops. Conventional public policy frowned upon the idea of business closure, and it was something that really, I would say, policymakers even now aren't very sophisticated at in terms of developing appropriate instruments for business transfer. Certainly the European Commission's been doing a lot of work on this recently. But this, as a result of the increase in churn of businesses, I think we've got to change our view about small firms as being permanent organisations. We have now a lot of project-based businesses, which again influences the way in which intermediaries are able to advise and support them. And the global financial crisis, I mean, obviously the UK it's been hit hard by the GFC. And this has accelerated this churn of businesses. There are more closures now, but also, interestingly, more startups. We've also seen a decline in manufacturing. Again, I think that's actually outside China, you might say, in some of the developing economies, that's a common phenomenon. And I know it's the same here in Australia. So again, that should affect the way in which the support infrastructure needs to think itself through. But the big picture is this. I'm presenting rather a bleak view about support for SMEs. There's no reason to assume that there will be a decline in the demand for advice and support. In fact, given the growth in the SME marketplace, I think the demand for external advice and support will grow. Okay, so there's a growth market. I think that really the supply side needs to get its house in order. You're probably wondering where my scepticism comes from about the way in which public policy has failed. And here are some latest figures. In fact, this data only came out a month or so ago. So I've not really had time to digest it all. But here are some top-line figures. Now, I would say this is reliable data, and it's reliable data from the UK. But I've got confidence, actually, that I think that this also applies to other developed economies as well. And feel free in any discussion afterwards to contradict me. This is a survey of over 4,000 small firms within the UK. 45% of them sought external assistance or information in the previous 12 months. Okay? And that's assistance or information. So there's two. When you look at the actual report, there's a table for information and a table for assistance. 5% of that 45% sought what is classified as strategic advice. So when you're looking at the big picture, only 2.5% of those 4,000 firms went externally for what is being classified as strategic advice. Now, given let's call it their inadequate resource base, I think that's it's fairly damning actually in terms of the way the external agencies are able to provide advice and support. The smaller the enterprise, the less likely the firm is going to go outside for advice and support. Now, again, that contradicts my earlier a priori reasoning to say the smaller their enterprise, the more it should go outside for external advice and support because it doesn't have it in-house. No, it's the opposite actually. The larger the enterprise, the more likely they're going to seek advice. Of those advice seekers, 52%, just over half, prepared to pay or have paid for advice. Okay? Then when you look at the reasons why what got them to go outside, it's what I would call environmental shocks to the enterprise. It's a crisis in the enterprise. It may be that a HR issue, you want to recruit someone because you can't cope with the demand, or you want to actually make someone redundant. You actually then have to go, and you don't have to, but they've probably never done this before, so they're looking for advice outside the enterprise. Changing regulations. That's one of the biggest stimulants to seek external advice and support. Something they have to do. What you've noticed here, actually, the default position is that the bulk of owner managers will try and do it themselves. I call it DIY strategy, DIY coping. And that's the default position. So the big point I want to get over is that the SME market for advice is not a pushover. There's a classification as to why, this is the main reason, by the way, because the report shows multiple response reasons, but this is just the main reason why businesses went outside. So this is the 45%, okay? You'd see regulation. Actually, I'm not altogether, this is not my data, so I'm going to criticise it. I'm not altogether happy with the way in which it has regulations as separate, because I think business growth does often trigger the need to cope with different regulations because you bump into certain thresholds. So the big thing here is business growth, financial issues, employment marketing, tax NI, legal issues, and then we've got this catch-all regulations. So they're the sorts of things that have caused the owner managers to go outside for advice and support in the last 12 months. I would suggest there's a massive untapped market here for advice and support. As you look at the bottom there, so this is the 55% who did not go outside for advice and support. They're asked why. Did not know where to go. They probably didn't look or try hard enough, because I think there's a lot out there. Not the right type exists is quite important, quite interesting for me. They doubt the benefits of the expertise out. Nobody can do this better than me. Why should I go along outside the organisation? Someone tell me how to run my business. You get this argument. Interesting here though, expense is not a major one, is it? There are other, let's call it, softer issues. Now, this is where I think a positive note. This is not just a result of a small business survey in the UK. If you look at any piece of work that asks about going outside for advice and support, the accountants are the most frequently used external source of advice and support for SMEs. And this result from the SBS report is typical. 40%, the main source of advice is the accountant. And then if you could come down, you can see that the LA is local, it's not Los Angeles, it's local authority. Local authority is 2%. The UK government spends billions of pounds every year, as much as, by the way, as much as it spends on the police force in the UK. 2% use government agencies, the deliberate organisation business link. So really the big message here is, look, there's a natural network here, and accountants are really the crucial organisations within that natural network. So this brings us round to today, and the way in which accountants in particular have got a key role to play. I pointed out the inadequacies of public policy, but I think that in order to encourage engagement between SMEs and public policy, there are intermediaries, crucial intermediaries here. The accountants are really linchpin in this. When we've looked at research on the role of the accountant, and this is work that I've done with colleagues here in the room, the relationship between the accountants and SMEs is contingent on price. It's contingent on the perceived competency of the accountant by the owner managers. And also, because there's an element of compulsion in that relationship, there's a trust that will develop. One of the big issues is between SMEs and any external organisation is information asymmetries. And part of that is that owner managers are reluctant to show their hand. And I'm not saying they're dishonest, but often they will withhold information that they don't think is important. If you have an ongoing relationship, then that all will come out in the discussions and so on. So actually the accountant, because it's a repeat relationship, a trust will develop. Now, of course, the initial relationship is often because of compliance services and things that businesses have to do. They have to have their accounts audited. They have to have things, their financial matters in-house. But actually what we're seeing from the small businesses' point of view is the need, a drift into other non-compliance services. So it could be human resources, it could be an intellectual property issue. Often accountants are regarded as a sounding board. You cannot just talk about the accounts, there are other things that crop into the discussion. And if you have a repeat relationship, then of course you may think, from the owner manager's point of view, they think, well, I need to make someone redundant. Where do I go? I'll phone up the accountant. The accountant then can maybe be just a referral, part of a bigger referral system, but they're crucial in terms of the external relationship. Our research also shows that there's no automatic extension from compliance to non-compliance services, and I think this is something that the accountancy profession needs to think through. And I know that, I mean, looking at the, let's call it the trade press, the professional press in the accountancy world, I do know there's already discussion and debate about this. In a sense, what I'm saying here is that the fact that you have a relationship over a compliance issue doesn't mean to say that you will automatically buy non-compliance services from that same organisation. Small business owners are incredibly shrewd, and they will only believe experts. So the accountancy in some way has to develop an expertise to serve the small business outside compliance services. So really the trust relationship, I would say, is only bounded within a specific area of expertise. And it's down to the accountancy profession, they're in pole position here, to actually think beyond compliance services. So really the need is for accountants to develop a competency trust and not just rely on the compliance trust that's being developed. Right, so I'm closing the presentation now. Just to recap, I started broadly by talking about public policy provision for SMEs. It's been extensive, but yet I would say public policy is still wanting. The take-up of often small business policy initiatives is weak, often low. And I've met a number of civil servants and politicians who said, look, we've got a Rolls-Royce service here, why aren't people coming along? And you know, some of the reasons I pointed out earlier on are still there. There's a need for clearer policy objectives, often they're muddled, and the evaluation approaches that we've often used are underdeveloped, and the evidence that we've had to improve public policy has not been used sufficiently. At worst, you could say public policy for SMEs has displaced existing activities, so we've got to be very, very careful. A good example of that, by the way, is a piece of work that compared Northern Ireland with Germany, and the way in which in Northern Ireland there were a lot of grantpreneurs, as they call them, people who've been given grants to start a business. And they compared the productivity of these organisations. They tried to do match pairs, which is, you know, a certain style of research, difficult to do, with businesses in Germany. The level of productivity of those in Northern Ireland was incredibly low compared with the ones in Germany, and that was attributed partly to public policy intervention. So we've got to be very, very careful about the way in which we just think more policy is better policy and better for SMEs. I think that incremental improvements are really crucial here in terms of developing public policy. But my fundamental point here is that partnerships with natural networks and trusted advisors is the way forward. And it could be that public policy is delivered through those natural networks, that you could consider that to be too radical. But certainly, there's no point in creating other networks when those natural networks, including accountants, already exist. So the role of, let's call it, non-policy intermediaries is crucial, and I think accountants are actually in pole position in terms of lubricating the SME economy. I hope you've been able to follow the fundamental points I've been getting over. I look forward to a successful conference, and I look forward to discussing any of these points that I've made with you over coffee. Thank you.